So I'll be sharing with you all a secret when it comes to trading POIs, right? Now we all know what POI is. I will assume most of us watching this video already know what POI is. Now what is POI? POI is point of interest in the market, zones in which the market is likely going to respect. You understand? Points like fair value gap, order block, breaker block, supply, demand, all these areas are known as POIs, and these are areas in which the market will most likely respect. Now the secret when it comes to trading POI, right? I see most traders make this mistake, right? They take POI anywhere in the market, which they end up having a losing trade. Now the secret to trading POI is actually what I will shock you to say this. The secret to trading POI is break of structure. Always wait for the market to give you a break of structure. Now take note of this. This is a short video but very educative one. Take note of this. A POI only works in a trending market, not in a ranging market. Fair value gap doesn't work in a ranging market. Order block doesn't work in a ranging market. Breaker block doesn't work in a ranging market. The same with supply or demand zone. Some of you might say supply or demand zone works. No, that is support and resistance. Supply and demand zone doesn't work in a ranging market. Now let me show you what I mean by break of structure, right? Let's say this is the market moving. This is what we are having, right? And we have something like this. And let's say there is an order block here. Let's say there's an order block here, right? Let's say there's an order block here. Yes. Let's say there's an order block here. Now, most traders would actually think that this order block will play out. Let me make this more understandable, right? Let's say the market started moving from here. Voila. Something like this. Something like this. Now let's say there's an order block at this particular zone. Most of you should know what order block is, right? And we're expecting the market to, most traders will say, okay, this market will hit this order block and it will go up, right? Now I want to bust your bubbles. Like chances is that order block wouldn't play out. Why did the order block not play out? This is what might happen to you if you are this type of trader. This is what might happen to you. Let's say you put a buy here, right? Let's say you put a buy here, and then you should put your this thing here. This is what might likely happen to you as a trader. This zone will reach here, even though there's a liquidity sweep at this area. The market will come all the way down here, only to hit you out, right? And like chances, it might even start going down. You understand? That order block will not be respected. Now, what was the mistake? The mistake is that this order block did not lead to a break of structure. You understand? Now, when will this order block be valid? This order block will be valid when it breaks this previous structure. Let's say this market is an uptrend, right? This order block will only be valid when it gives a new high after it's been formed. What do I mean? Now, this order block was formed. This was the area where the order block was formed. This zone should give us a break of structure like this. Now, once we get a break of structure like this, and the market should now come all the way back down here, you understand, to this area, right? That is when you can now buy this market in the hopes that it will go all the way back to this top, and most times if it will even break it. That is how you know that a POI is valid. A valid POI always give a break of structure. Take note of this, right? Take note of this. A valid POI will always give a break of structure. Let me show you another example. Let me show you something of maybe similar patterns. Let me use a downtrend this time for those who might be feeling confused. Let me use a downtrend. Now I want you to look at this pattern. Let's say the market should do something like this. This is the downtrend. The market should do something like this, right? Do something like this, and then it formed what a fair value gap here, right? This is a fair value gap. This is a POI, fair value gap, right? And then let's also look at this same type of setup, but the market should do something like this. Let's say the market did something like this, right? And then also formed a fair value gap here. Let's say the market formed the fair value gap here, right? Let's say the market formed the fair value gap here, and this fair value gap, the market was going back to test this fair value gap. And also, let's say in the same case scenario, the market was also going back in this kind of pattern to test this fair value gap. Now, which one do you think will most likely play out? Which one do you think will most likely play out, right? It's going to be this one. This one will likely play out. Why would it play out? Because here was a break of structure after this fair value gap was formed. And where is the break of structure? This is the break of structure. This is the market that formed the fair value gap, and this was the break of structure. So the market will most likely go up to this fair value gap, right? Touch it from here, and you will see a massive sweep to the downside. You understand? And also, let's look at the same thing here. Now, most traders will start looking for a sell here, right? Let me push this. Let me give this more space, right? And carry it all the way here. Voila, let me give us more space for this. So now most traders will be looking for a sell at this fair value gap over here. Why? Because they say, okay, the market has formed the fair value gap and it's probably going to come back to respect it. And if you are that type of trader, here is what will happen to you. You put your this thing here, you put your stop loss obviously above here. Here is what will happen to you. Because this market did not give us a break of structure, there was no break of structure. You can see there was no break of structure, right? This market will likely do something like this. Maybe it might just react to your fair value gap. You think it's going to go down, then come and take you out. Possibly take you out and then come down. You understand? Markets always do this. Sometimes you have to understand the secrets to all these levels. It's not just by finding the levels. You might be good at finding FVG, you might be good at finding order block, but you are making one common mistake. You are not waiting for a break of structure. And this is what will most likely happen to you if you are that type of trader. Now, let me just show you a little bit of live example. This video is already coming too long. Let me just show you some live examples. Now, this is Euro USD, right? And we can see that this market, first of all, was an uptrend from here, from this time frame was an uptrend, and this uptrend led to a change of character, and this change of character led to a break of structure. We can see there was a break of structure. This was the break of structure, this zone, right? It broke this previous swing point, which is this zone, this level. It broke this level, which was the previous swing point. Now this is a break of structure. Now this market started retracing all the way back up, and if you look at this clearly, this is a breaker block. For those who don't know what breaker block is, don't worry, I'll be making a future video on breaker block, but I think I've done that already. This is a breaker block, right? And also there's an FVG in this level. Now this market will likely hold. Why? As you can see, it sold massively. Why? Because the market give a break of structure before coming all the way back to this POI. So for those who enter this trade, this is a very, very good trade to enter, and the market will give you your good profits just like that. You understand? Very, very sweet profits. Same thing with this area here. We can see I'm marking this area as premium. This is the level I'm waiting for. The market have even sold more massively today, so it might not likely come back to that area. But if we are looking at this, we can see that the market actually gave another break of structure, right? And that break of structure, if the market should come back to test this area, we can expect a sell. But unfortunately for me, market did not test this area before selling massively. But you can see that if market would have tested that area, I would have been in massive profit. You understand? I would have been in massive profit. So that is the secret when it comes to trading POIs. Always wait for a break of structure. You understand? Let me show you one more example of maybe an uptrend, and then we can call it a day. So this is USD JPY, and this is an uptrend. We can see, and we can see that this market did a high and a low, right? Another high. You understand? And this high led to a break of structure. Now there was a fair value gap at this area, and because the market led to a break of structure, came back to test that fair value gap, it made it more valid. Now for traders who place their trade here, they are more likely to make profits. Why? Because there was a break of structure after the POI was formed, and you can see it gave huge amount of profit, right? Huge amount of profit. So that is one of the secrets I want to give to you all today. Whenever you are trading a POI, always wait for a break of structure. Well, it's AceFX here, and I hope you understood everything I said in this video. Have a lovely day ahead.